I guess we're live, right? So, hello, everyone. Good morning. I think I'm not hearing myself yet, so that's the thing with my new workstation right now. So let me check. So, mm, 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 give me a moment, please. Trying to. Okay. All right. Good morning, everyone, and I do hope you can hear me loud and clear. And I do hope you can see my screen. If you can, please let me know in the comment section so that I can do the necessary adjustment. And before we go in, so sorry, we're coming in very late this morning. I did mention in one of my broadcasts in recent times that I'm out of state, um, in another location entirely with a different setup, and due to the activities going on here, I wouldn't be able to run through um, the sessions at the usual time. So immediately I have the opportunity to do it, I will quickly run through, and I know definitely a lot of us are going to be missing out on this live session, but of course it's going to be available, and anyone that comes in later on can actually tune in to watch what we talked about here. So I'm very excited to welcome you all to another promising edition of the Forex Morning Mastery. Happy new month to everyone, and welcome to the month of September. Trust you had a great weekend, everyone, and I'm very glad to have you here with me this morning. And a new month is here. We know what that means. It means a fresh page for all of us, and whatever happened in August, good or bad, we are here. We are here to reset and get ourselves prepared for a new perspective. Markets will be moving with new flows and new narratives, and our jobs as traders isn't just to predict everything perfectly, but to stay sharp, and manage our risk, and of course ride the opportunity that show themselves. And it's important for us to also understand that the first week of a new month is often full of fake outs. Definitely, we're definitely going to be seeing some sudden breakouts of structures, which might later turn around to be a fake out, especially with the NFP coming in on Friday. So patience is key. We are not chasing the market. Let the setup come to us as we strategically position ourselves for the next move. And remember, it's not about how much you make today, it's about how it's about staying consistent all month. And this is the purpose why we are here. And for those of you who are joining me for the first time, my own name is Sheriff Daramola. And for the next 30 minutes thereabout, I'm going to be your host, taking you through what I'm looking at for this week. So we usually do this 3 times in a week, that is Mondays, Wednesdays, and Fridays, where I take you on a journey into what my plans are on the specific assets that I am monitoring. So for this week, we are going to be monitoring the US crude oil market, the GBPUSD, and of course the XAUUSD, popularly known as the gold spot. And of course, we are in right into the business for today. And of course, the first thing we normally do here is to keep ourselves updated with what is going on in the US dollar market dynamic, right? And last week we saw how the US dollar rose at the beginning of the week. What you see on my screen is the DXY chart, the US dollar index. And last week we saw price rise from that our key level at the $97.70 level, as you can see here. Price rose all the way into the $98.75 level, and on Wednesday we saw price crash back all the way into that structure where it started last week. So it was more of a break even for last week on the US dollar, and the strength in the dollar at the beginning of the week was as a result of traders reacting to what the Fed chairman said at the Jackson Hole Symposium, where he hinted at a interest rate cut in September, that is this month we are in. So on Monday, some traders quickly bought back the dollar to cover positions from last week, from the previous week, the upper week, I mean, and that's why the US dollar started the week stronger. However, during the midweek, we saw the consumer confidence reports dropped, showing that people in the United States are less sure about jobs and the US economy. And even though the GDP for the United States looked promising, we saw about a 3.8% growth in the last quarter, a little bit higher than the previous quarter, but traders didn't really care much because the focus now is on jobs cooling. So as a result, we saw profit taking activity, bringing price back into this particular structure where it started the previous week. So my structure on the US dollar index hasn't really changed. Remember, for those of you who are with me last week, this was what we were looking at. We had a beautiful ascending trend line which captured the fact that the dollar was rebounding since the beginning of July. And between July and the end of August, price was consistently sitting above that trend line, making us to keep a bullish perspective alive. However, as the new week and the new month comes into play, things appears to be changing a little bit. And of course, we need to take the changes seriously. We need to, of course, also tune into what is going on without getting caught up in any form of clinging on to the past. Now, with what we are seeing here on the chart, You can see my key level from last week still remains very much intact. That is the $97.70 level, a level which had consistently played a significant role in determining the direction of price action since the month of June. As you can see here, it has served as both resistance and support line. And look at how beautifully it shares a confluence with that ascending trend line we spotted during the previous week, as you can see here. Now, with the way things are going now, price is back into a demand zone. Let me zoom in so we can see things clearly. So if I zoom in right here, you can see since the beginning of August, we saw how this area between the $97.70 level and the $97.50 area had played a crucial role in negating all attempt by sellers to break through that particular structure. And for the fact that price still remains above the demand zone, it keeps the idea of buying the US dollar alive at this point. Now, and the only condition that could make us consider selling is only if we can see price break down both the trend line and that key level to incite some selling idea after continuous selling pressure below that particular structure. And you would agree with me that going into the new week, we are at a critical juncture where, depending on how price reacts to this area, will determine what our next line of action